Hey guys, do you trade options? Well, do you like to get ripped off? Of course not. Nobody likes to get ripped off. Well, right now, volatility is very high. Global tension's high, markets are going all over the place. And that means you're probably paying too much for your options. And in today's video, I'm going to show you how to avoid doing that. All right, we're back in the lab, and today we're going to talk about option volatility, and I'm going to teach you just what you need to know. This is very important, and it's going to help you avoid getting ripped off. Nobody likes to get ripped off. So, as a general rule, option price overreacts to price movement. What does that mean? It means when stocks soar, when stocks go up, when they're moving up, call options become overvalued, and put options become undervalued. When stocks sink, call options become undervalued and put options become overvalued. Now, pullbacks give you an opportunity to enter the position when the option is below fair value. Let me explain to you why. So this is a chart of Qualcomm, and you can see what happens to call options when price rises and when it pulls back. And you can see here when the price of the stock moves up, when it's moving higher, the call option becomes overpriced. But now look at what happens when the price of Qualcomm pulls back. When it pulls back against the trend, when it becomes cheaper, when price pulls back from $60 to $55, that same call option becomes undervalued. Because as I said earlier, option value tends to overreact. So when price is moving higher, the call option will become overpriced. And when price is moving lower of the underlying asset, the call option will become undervalued. And that's one of the major benefits of buying pullbacks. You're buying the option when it's undervalued, temporarily, right before it becomes expensive once again. When you're buying breakouts, when you're buying the option when the stock is moving up, you're buying the call option when it's overpriced. But here on a pullback, you're buying when it's underpriced. So always look for pullbacks because they're going to help you buy options that are undervalued. I didn't want to get into implied volatility in this short video. I just wanted to explain to you the basic principles of what causes options to become overvalued and undervalued. And the best time to buy options is when the position is moving against the main trend, when you're seeing a pullback. Hey gang, I created an hour-and-a-half video for you, a total tutorial to teach you how to trade volatility, how to get in low-risk trades, and about the long-term and the short-term trade connector. Don't miss out, register below this video. Talk soon.